Blackstone is one of the OG titans of the real estate world. They own basically everything and almost everything you buy as well. Blackstone's defaulted New York City office tower is up for sale. The loan is at a 50% discount, which is insane because we're talking about Manhattan here, which is still commanding some of the most expensive real estate prices in the world. Guys, if you look at Manhattan residential real estate, it's actually still pretty powerful. I know there's a lot of people who dog on New York City real estate, but despite the problems, there are still a lot of rich people around the world who want to cop a couple pieces of Manhattan real estate. And I've been looking at Manhattan real estate for years, and despite a lot of people leaving the place, the prices are holding somewhat steady, but they're still trending a little bit downwards. Now, compared to San Francisco, it's like beautiful, right? San Francisco housing prices are just literally down in the dumps. But Manhattan still holds some value, except office buildings. Blackstone defaulted $308 million mortgage on a Manhattan office tower more than a year ago, and now the debt is up for sale at a discount of more than 50%. They actually hired some loan service guys to sell the Blackstone loan, and this is actually a good building, guys. 26-story Art Deco style building between 55th and 56th Streets, and JLL has packaged the debt into a commercial mortgage-backed security for $150 million. It's a 50-ish% discount. It's pretty nice, and I guess if you guys have money, then definitely go for it. Blackstone is not happy at all because the skyscraper has been losing value since 2014. Guys, I'm telling you, even in Manhattan, this city still has pretty good real estate values that hold pretty strong. Their office buildings are literally trash. Now, can you imagine office buildings in places like St. Louis, San Francisco, Chicago? They're even worse. Chicago real estate in the commercial sector is selling for 90% off. Can you imagine like a 12-story skyscraper selling for $4 million? I mean, $4 million in Manhattan gets you a 2-bed, 2-bath on like the 15th floor somewhere. So you kind of get the idea. It's not really looking so great. We're also seeing luxury real estate taking a humongous beating. And so far, office real estate is only going to get worse. And Blackstone is starting to notice. They are literally taking huge amounts of crazy debts to pay this off. And you have Wells Fargo doing the same thing. They took a loss on a -50, -70% loss on a San Francisco office building. They just took the loss. This is what Manhattan looks like in the East Village right now. You have a lot of homelessness, asylum seekers, and this is kind of sad. There's little to no support, right? The city, I don't know what they're doing, but this is kind of like what Manhattan kind of looks like now. I've been to the East Village several times. It's a very charming neighborhood. It's also close to Chinatown. You have a decent amount of tourists. Condos are pretty nice. But this is kind of what it looks like in Manhattan in several areas. And the city really isn't doing much. You have a lot of homelessness, and the situation is only going to get worse. When you start getting people camping in the parks, the city isn't really doing enough. So this is what it looks like, and I kind of see why a lot of people are moving away from New York City and going to places like Florida, and some New Yorkers are even going to places like Toronto, which they dub like the Manhattan of Canada, and it's just like Manhattan, but a little bit cleaner, I guess. But it doesn't really help when the feds are like, we're cutting rates, but we're cutting rates at a slower pace. Atlantic Fed boss warns U.S. progression on inflation is likely to slow. And inflation numbers weren't exactly the greatest because CPI numbers went from 3.1 last month to 3.4. Wholesale numbers were a little bit better, but overall, the feds are a little bit scared by the situation. They don't necessarily want to continue hiking at rates more than they have to, but you already have retail sales report strengthens the Fed's resolve to slower the pace of cuts. This is not good, guys. Everyone was expecting like a February or early March rate cut, but we could be delaying that till June. It may just seem like a few months, but a few months of high interest rates will absolutely cause more defaults in the real estate industry. And these New York City offices, they're selling for very, very cheap prices, and things are only going to get worse, in my opinion. Thanks for watching, guys. Comment below. Definitely check out the private Discord server, guys. A few days ago, we already made a bunch of money, like 50% here on the QEQ. In the mRNA, we made like 73%. We also made a bunch of gains here on other traders. So check us out. There's even a free trial, 7 days, and after that, it's only $20. See you later.